Hello, folks. Welcome to an edition of Market Action. Dave Russell here. Well, we're in bullish on the S&P today, and in my view here, we have, I do not, like I said, I do not normally do mean reversion trades. Um, you know, that's the idea that something is, you want to buy it because it's oversold. But this is an extreme example of an oversold condition, and this market is actually, by some measures, more oversold than it was last August. We showed you yesterday the Bollinger Bands and stuff. I mean, this was a tight triangle, and we already had some real signals here it was going to break lower. But this had been ripping higher at the time. The 20 and 30-day was rising before this Brexit thing happened. And, so my view here is like I've said, I think a lot of the news is now priced in terms of Brexit. And now we basically have U.S. GDP revised up. Look at this. Initially, in late April, it was 0.5%. Everyone thought it was terrible. Then it was revised up to 0.8. That was a little better. Now it's higher than expected. They pretty much doubled Q1 GDP. How about that? Consumer confidence better than expected. And so overall right now, I think we're going to be focusing on a point when the calendar is actually getting more attractive right now. These Europeans are sitting around in a summit and just talking, and that's all that's going to happen for the next 2, 3, 4 months. And because they're going to have the whole thing with Cameron going out and new prime minister coming in, and we have all kinds of news before then. We have ISM on Friday. We have the 4th of July long weekend. Then we're going to have a bunch of Chinese numbers tomorrow night. We have oil inventories after the bell, but the key thing is the next this week and next, we get into that normal cycle of economic news of the ISM, then the big payroll reports. We have Fed minutes actually on the 6th, but who even knows? I'm not even sure if that matters because it might be the minutes from the meeting before Brexit. But then we have non-farm payrolls on July 8th, and then we go to the following week and we hit earnings season. So, I think that's just kind of something to bear in mind here. By the way, if I'll show you a little tool you can do, you can go to this. This takes a second to load, but if you go to SPX on Research Lab, it's actually, it could be more graceful, I know, but I'm working on this one page. But one thing I do want to point out that you might find useful, in addition to the calendar only shows about a week and a half out. But if you go to SPX, it's going to load here, and it's going to show all the upcoming earnings in the S&P 500. So I wanted to point that out. It's loading slowly, but here's the calendar for the earnings in the S&P 500. As you can see, there's still a few coming up. These are more obscure companies like Paychex and McCormick, which makes spices. But then we start getting into the big names down here in mid-July. So next week is monthly data, payrolls in particular. The following week, earnings season gets underway, and then it's the summer. And then we come back and we have U.S. presidential elections. And wait a second, what's Britain? I don't even remember. Is Britain, where is it, like Asia or something? That's what the point is going to be at that point in time. And I know I keep kind of saying that, but I think that's still kind of the thing here. Today the options activity is pretty much bullish. We basically see, I think right now, when we first saw that the option activity, we saw JetBlue out of the gate. They were buying the December 15 calls. Here you have a stock that's just back down to a very long. Most of the paper is actually kind of longer looking out in time, saying, this is stuff that's just completely demolished, and here it is down to the level from early 2015. They're buying the December $15 calls that were kind of right in the money in JetBlue. I might have been a big fan of the airlines, but you're also looking now at a sector that's just been totally destroyed. ABC, AmerisourceBergen. I mean, here's a name that we don't see a lot of. They do this pharmacy benefits stuff. This stock is also down to a long-term low. They're going all the way up to Jan of 2018, and they're buying the $90 calls. So, this stock is kind of near, some longer-term levels. This is a big breakout that this stock had right here at this level in pretty much middle of July of 2014, right at this kind of 75 level pretty much. I'm sorry, 73, and it's pretty much been holding that. And now we're seeing the paper looking for a long-term rebound. Tempur Sealy, heavily shorted name. consumer discretionary, earnings have been so-so, but also it's holding the bottom of, it's not I mean, this range is a little less clear, but I think we can see that somewhere around here in the mid 50s, there's a lot of levels where people could be looking, I think, for some support here. If you look at this level right across here, somewhere through here, and I'm saying it's not a super clear level, but the thing is this company's going to have earnings before expiration, the end of July. It's got a lot of short interest. And if you really consider, if you look at on a 3-month chart, when you really look at it, it hasn't done that badly when you consider the fact that the market got just crushed in the last week. This stock is kind of just, holding some lows here. Stock like this could snap higher. Those AUG 60 calls could work. So anyway, I wanted to point that out. VMware, another heavily shorted name that we've been bullish on. Remember, I'm a big fan of the software sector. They are buying in VMware. It's a call roll from July 65 to September 65. There's another company that's had good earnings report right here, and now it's pulling back. When you look at this is also going to be looking toward earnings. I think the end of July in this name as well. July 19th, sorry, is estimated on this company. But, September 65 calls is what they bought today. That's pretty much the stock's, high back in earlier July. They're buying puts in Wells Fargo. Now, this is one of the weaker names. The AUG 42 puts were bought in this name. Bank of America, November 16 calls sold. BAC. Just kind of chopping around down here. I actually have a list of some financials to consider. I think the key thing right now is if we look at bonds, this is at like a high here. And if we actually look, though, at the bond futures, with like a 10-day chart with the hourly candles on the Options House platform, what we can basically see is there's a double top here on this. And, we had good data today. GDP was good. We had good consumer confidence. Then we have ISM on, like I said, on Friday. We have personal income and spending tomorrow. The question is, should bonds be at this level? And I think that's really the key thing. And I think right now, it's not necessarily, I would just ask, do they belong at this level? And, if these guys pull back, the financials are going to snap higher. So I was looking for financials that had good earnings last time around, or somehow it's some really strong support. One of those is Regions. I mean, RF has been really strong on earnings. And here it is down at this $8 level. A lot of support here. Another one, Radian. This stock has had some really good earnings, but it's just been completely demolished. This is a mortgage insurance stock. We used to like this. We caught a lot of this rally, and then we pretty much bailed when it broke that uptrend. But we had identified this one as a buyback here somewhere, and it was pretty good for a few months. But now here it is testing that old low. RDN might be attractive. I think this stock trades for less than book value, and they have an improving credit story. I mean, this is just a stock that should be a lot higher. And then the other one is MetLife. It's if interest rates, here it is near support. If interest rates go up and bond prices go down, a stock like MetLife is one place you're going to play that. So, I'm not doing anything with financials myself, but I am pointing this out because I think we do have that potential here for the reversal, especially when we go into next week's economic data. I think a lot of bad news, priced in. AEM is a gold miner. They're buying the Feb 60 calls in AEM, Agnico Eagle Mines. There's also, wait a second. I think I wrote the wrong thing here for one of these. Take a look at the Inside Options Pro Activity Log. If we take a look here. There was something in DAL, and I think I wrote the wrong thing. It's a bullish synthetic. It's not a collar. Sorry about that. DAL, bullish combo. The collar was in SFL. It's kind of an unusual name. I think it's called Ship Finance. They do something with like financing like cargo ships or something. They bought the 7.5 puts, sold the $15 calls. So basically, there's a protective strategy. They're selling the upside, using it to finance the downside hedge, and that's pretty much kind of a standard hedging. You can see right here. They bought the 7.5. Wait a second. SFL. Wait a second. Maybe I put the wrong month. I know this had something today. Oh, it's January of 2018. Sorry about that. So you can see they bought these puts and sold these calls. So they're probably long the stock and looking to hedge. What do I think about PPL? You know, I think utilities here are pretty much running at just stale. I would avoid them. I don't know. This one's really gotten slammed. You know, this is a good question. I don't know why it's down so much. Most utility stocks are much better than this. It looks to me like it's at a good level, but I don't know. The fact that other utilities have done well and this one hasn't is to me a little bit troublesome. Mark, take out PPL. See, they have bad news recently. I don't know about this one. We're going to check it out, and please ask me about it tomorrow. We'll revisit it. PPL. I'm thinking maybe they were doing a merger and they got some bad regulatory thing, but I don't know right now. Why do I not like Amex? Well, American Express is, from what I can tell, they've been losing market share. You know, they've had, I mean, the chart looks way worse. You're asking why do I like MasterCard and not, or Visa and not American Express? Wait a second, V. We had call buying in V yesterday that those calls did pretty well. AXP is a different ball of wax, though. I mean, this company basically, you know, we look at AXP's earnings. They're not really very good. And I'll tell you, you know, I think this is a company that used to have a very strong market position, and they're kind of like Avon Products. I mean, this is just a company from a different era, you know, and I just don't, I mean, this chart looks horrible. I don't think these guys are in a good trajectory at all. I mean, they have a lot of weak revenue numbers. It seems to me like they're losing market share. See, losing market share. If you look at that previous earnings report, losing market share. So I think this is, I just think I think it's a company that's on the wrong side of history right now. And, you know, I think they're losing. Has gold peaked? Near term, I tend to think it probably has. I'll be honest, I'm bullish. I've been buying the S&P. I'm long energy right now, basically long the XLE. So I'll talk my book and just say I think the market's going to rally back from here. I mean, I think you guys know that. I don't think Brexit is going to, you know, I think where the bottom is in, you know, we very well could rebound and make a lower high and then roll over. I mean, that could happen on the S&P. But for me right now, I tend to think that the next move is to the upside. I tend to think that that gold has pretty much been moving inverse to the market, and I tend to think that gold will pull back here. I'm waiting for GDX to go back under 25.5, and then I'm a buyer. I think every time you buy this thing along the support, it's a good idea. And right now, it's at the top of the range. I'd rather wait for some kind of pullback. You know, let me see if we can take a look at the S&P chart for the futures. Yeah, sorry, I was having trouble with these charts. We can look at the SPY, though, because the SPY is squeezing into a really tight sort of thing here. You know, in my view right now, I do this thing when I have different charts on multiple computers, and sometimes I think I hurt my platform by doing that. But anyway, that's why I can't get the futures to show up. But here the thing is that, you know, what we really have here is we have this index is trying to consolidate pretty much above the highs from overnight. And you can't really see them. But there was a high that happened early this morning, basically right around 2. The corresponding level was this line right here. Actually, I already drew it. This line. I'm going to delete this. And now what we're doing is if you could see the futures, you would see that we're actually forming a triangle right here. There's basically, and I wish I could, you know what? I can actually show you December futures, although these levels are going to be different. If we take a look here, let's take a look at the one-day chart with 5-minute candles for the December ESZ. But you can basically see here that this is now forming a triangle. Lower high, lower low, and there's a triangle. And let's just see what happens. You know, the other thing we like to look at is that this will show the 15-minute chart. You can see here that this teal line, the 20 MA, is stalling. The MACD is stalling. And the question now is really, is this a place where we stall and roll over, or do we break to the upside? And I think right now we have to wait and see. We had said to buy that pullback down on the SPY when it went down to 201, I think 38. We said to be a buyer down here, and we got something of a bounce off of that, but now I think we have to just wait and see. This is forming into a triangle. I think we have to see what bonds want to do. I'm also watching these currencies because this is the pound against the U.S. dollar. It's kind of trying to work higher, but it's chopping here. I was watching the U.S. dollar against the Japanese yen. This is a very traditional risk-on thing. If this continues higher, I still think that we have a situation here where the yen is overbought, and you could see the dollar move up against the yen and the yen move down against everything else. One way to see that is the FXY. This is the yen ETF. This is the opposite of dollar yen. So when this goes up, it means that the yen is strengthening. Dollar yen is the opposite way. But if we see this continue lower, it's going to turn into a bullish thing for a lot of other sectors. And I think right now, things are still pretty correlated. So I think we have to really wait and see. Does energy come back to life? We have API inventories tonight. Another interesting thing is that there's actually a strike in Norway coming up this weekend, which is kind of lifting energy. All right, let me take a look at some of the other questions. Do I like defense contractors? Raytheon. We did Raytheon a while back, and it worked pretty well. I don't know now. I think this one's just, I don't know. I think this one will just get knocked down a little lower. I think you wait in Raytheon. GD. The one that actually popped up on, I don't like this one. The one that popped up on my list was Lockheed Martin. Now, there's one of the things I can do on Research Lab. I can kind of run my own custom scripts, and in the future, we're going to actually make this available to you guys in the future. But I was running some scripts on Research Lab, and I was saying, show me companies that report earnings in the next month that had good earnings last time around and that trade at least 1,000 contracts a day. So that will identify relatively liquid names that have a history of good earnings that might go up into the next report. And here we have a list. And Lockheed Martin actually came up on that list, along with Danaher and Constellation Brands, F5, which I own, and we were recommending F5 yesterday. I think this is a pretty interesting name still here. It's spiked down, held this level. F5 Networks. So these are some of the other names that I think were interesting that have the potential to rally. Danaher, let's take a look at this. This is one that we've really liked. I mean, this company has some healthcare exposure. It's a very, slow-moving name, but it looks like it's getting ready to break out. And if this market kind of gets its footing back, I mean, this stock, could just run to new highs. It is one of these companies that doesn't get a lot of attention. But this is the kind of company that, I think it makes sense to do something like buy the further out of the money, like, let's see, so earnings are going to be in, I think, the August expiration. I think they're estimated for late July. That's going to be after expiration, the 25th of July. Third Friday is the 15th. So basically, these options right here, you want to go for August. I think it's like the August 105 calls or something. I mean, look how inexpensive these are. That's the sort of thing that, this stock could just drift higher into that earnings report or the 100s. I think I didn't look at this before, but some of these sort of strategies, you're looking at a name now this is not a heavily traded name. This is not something that has a lot of fast money in and out of it. This is just one of these quality institutional companies, institutional buyers. First pullback to the 50-day moving average. We were identifying it back here in February as a buy, and it's still pulled back, holding these old highs. This is one of these stocks where if the market doesn't crash massively, I think that it's probably going to go back over 100 and maybe never come back under it. It's just been bullish for a long time. I mentioned Lockheed Martin. This thing barely flinched when the market, got whacked recently on Brexit. Illinois Toolworks. It's funny. I set a price level on Illinois Toolwork at 100, and it never went down there, and now here it is down at 100. We had talked about this level. Let's see if we've got it on the Market Action has this summary thing. If you go into if you go into Market Action Pro on the inside out on the Option Monster website, you can actually see here we put in levels. We said wait for 100 on the 18th. So the idea that we want to do is we want to be kind of watching those things, waiting, setting price alerts, and wanted to let you guys know that this is available to all you guys who watch market action. If you're having a question, you say, hey, David, what do you think about like XYZ stock? You can type it in here, and then you can submit it to me, and I'll address it on market action. But we also keep a list of all the levels and the different things we cite on market action, and this is something if you guys want to set some price alerts and stuff. Another one that's just been very bullish, and consumer staples have been strong again recently. This stock does not trade well, but it's a great name. We tried to do calls when it pulled back to the 50-day, and it just kind of swiped us lower, but it's still a pretty bullish name. And it looks to me like Constellation Brands might come back to life. And another one that is just a stalwart that just won't stop is United Healthcare, United Health. And then Paychex. I mean, here's a company we just never look at this, but it's got a bullish cup and handle. This is a payroll processing company. This is one that has, earnings coming up. The last report was good. And then the one other one to mention is Comcast, which really has been a very good name. And, we were citing it here when it was chopping around. We had a decent little trade jumping up and down a little bit along this line. But, this looks to me now like it's, getting ready to break out. It's been consolidating here for a long time, and it might just run higher into that next earnings report. So I think there's another one we want to keep our eye on. I think Comcast is a good name. Let's take a look at some of your questions. Is EA bearish? No. In fact, EA is one that Electronic Arts, I actually think it's still attractive. I actually have it on my list here as stocks that are still attractive along with Activision Blizzard. This stock here is pulling back to a nice level. I think this right at the 50-day, I think is a pretty good place to be long this. A lot of questions about biotech. I've been more on the bull side in biotech here. I mean, it's holding this 240 level. I'm long Amgen and Acadia. We were recommending these. I came in a little bit early, but nonetheless, I think you're just looking at, I know I keep saying Amgen, but this is just a great company. I mean, it's really not expensive at all, and it's outperformed the sector. And, I think buying Amgen down here is in decent shape. IBB overall, it looks to me like it's holding this level, this double bottom. And, I think if you're constructive on the market, look, if you think that the market's getting ready to correct and break to new lows, you don't want to be in IBB because it will get destroyed. I don't think it is, though. And, I think right here it's probably a good place to be looking to buy it coming off this double bottom. I'm not sure the market goes to new highs, but when you look at the economic numbers, one of the things is, the bearish thesis is it's just not coming. The recessionary story, it just isn't coming together. GDP was strong, consumer confidence was strong. We continue to have pretty good jobless claims in terms of not a lot of people losing their jobs. So, I think it's still, something like IBB down here, you're looking at a sector that it's holding its lows, and it could easily draw bottom hunting. And I would say this, that I think as long as the S&P doesn't crash here, I think it's going to hold that low. Now, it could easily just kind of drift around and not go straight up, but it seems to me like probably a decent place to be looking. Like I said, I think right now, this level around 2,000 on the S&P, like I said, I think that this is I think a pretty strong level for the time being. Another one that's pretty bullish, and this stock has barely backed down, is Cliffs. I think this one is. I know it's just holding here, but if this breaks this triangle, this thing could just go sprinting. I think this is one that makes sense to have some longer dated calls or some vertical spreads or something in this. Maybe something like look at the 5-6 bullish call spread in this. It's basically around less than 30 cents for that bullish call spread. I think 60. Yeah, no, it's 25, 35 cents, right? So that's a 3-to-1 risk reward, and I think when you look at how bullish this name is, it's really barely flinched. It's pretty amazing when you really look at how well this thing has held up. And this got a big upgrade a while back. This company has really shown. I've been very bullish on this. This company seems to have really shown signs of turning a corner. And I think, this is one that we really want to kind of, if you look here, it's totally outperformed on a year-to-date basis. Earnings revenue beat, sees steel market improving. Signed a new supply contract with ArcelorMittal. JP Morgan upgraded. Macquarie upgrades. I think there's just a lot of stuff happening in this name. So I wanted to point out, I think, Cliffs, and it's still got huge short interest. So I still think Cliffs here is a name that this could just keep flying. Another one that's interesting that has not gotten a lot of attention is H&R Block. This company had a good earnings report last time around. Looks like I actually did it twice by accident. But on the 9th, if you look at this, the way it traded coming out of that earnings report, it rallied higher. And, this is just a name people have completely left for dead. But if you look at it here, it looks like it's just trying to hold this level. And, this is one that I think, as long as it holds right under this level from yesterday, I think you have a pretty good risk reward in this name. Let's take a look here at like a shorter term chart. The low around 21.65. I think as long as it holds like 21.5 or so, that'd be a good, stop loss a little bit under 21.5. This has got significant upside. It's a turnaround stock that most people have, most people probably think this company doesn't even, have publicly traded anymore. It's been so forgotten and just so horrible in terms of, because obviously they've gotten, the whole tax preparation business has changed, but there's a company that's now trying to change its business around. And anyway, I just think it's kind of interesting. When a management raises dividend, that gives people a real sense here that that they're turning the tide. And I just wanted to point that out because, this is now a transformational kind of story, and I think this name could also work higher, and I think it's one that we want to, just not forget about. The other thing is McDonald's is still at the 200-day. When you consider the European exposure this has and the fact that it's not down more, I think McDonald's here, this is, I think, the time to be getting long. It's holding down here around these levels and 200-day moving average. It might chop a little lower, but I think, again, as long as the Earth keeps going around the sun here, I think this is a pretty strong name. And this company had this huge rally last year when they did the all-day breakfast. It's been one of the strongest names. Let's actually take a look here on Research Lab because we can look at the Dow Jones Industrial Average. Let's look at a 6-month performance ranking the members of the Dow. If you go here and you put in the Dow, go to member performance, 6 months, well, let's look at maybe 12 months. See, McDonald's is at top in the last, 12 months. So in the last 6 months, it's just been kind of consolidating, but it's the biggest, and it's just, so, it's pulled back now. This is the first pullback to the 200-day moving average, and, that is, I think that's a place where people are going to step in. I think the earnings in this name have remained pretty decent. And I think the story is still pretty exciting for a lot of people. I think a lot of people said, hey, I missed, they're going to be coming into it. Earnings revenue beat, just continues to be strong. Earnings are going to be here on the 26th of July. If you look at the last earnings report, the stock was way up over 125. Here it's down almost 10 points from that level. I think McDonald's here is a place to be looking. So just so you know, folks, if you do want to do this, for the major indexes, you can go to Research Lab, put in the ticker DJI, SPX, and you can actually look at the member performance. You can also do it for things like you say, you know what, banks have been weak, but who's the best? You put in the KBE Bank Index, and then you say member performance, and you can say in the last month who's up and down the most or the least, and you can filter through these results. So just want to let you know there's a lot of these things you can do in Research Lab and find the relative strength. Why do I think CCL reversed this morning? It had earnings. Let me take a look. I think it had bad guidance, if I remember correctly. Yeah, earnings revenue beat, guidance weak. So I think that's the problem. Not a great set of numbers. It just seemed, I got to be honest, I think this industry is just not working. These guys spent a lot. I remember I was doing analysis of these companies like last decade in like 2009, early 2010, and everyone was talking about, they have all these new ships and blah, 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 and they're going to have higher margins and stuff in the future. But this might be just kind of like the casinos. Like they have too many assets, and the yields are not just panning out, or just not panning out. And I think that's the sort of thing right now with a name like CCL. I think there's something not wrong and not right in this industry, and I think that there's probably. I think these guys just did their bad. I think they just did their homework badly. I think these guys planned for customers who don't exist, and I think there's less demand for cruise ships than they thought. And like I said, they built all these massive cruise ships about 10 years ago, and I just don't think they're getting the return on assets they were hoping for. CCL talked about European exposure during the conference call. Yep, well, not a surprise. It's always been a European exposed company as well. Thanks for that, Mikey. Whole Food. Is it a safe haven? Well, I don't think Whole Foods is a safe haven. It's got a lot of short interest. I mean, this is more like Tesla or something at this point, or like GoPro. I don't know. Let's see what the last earnings were. I have to say I don't think so. I think this is a broken stock. I think they're going to find a way to put to put lipstick on the pig for a quarter or two. But at the end of the day, you're looking at a company that its secular growth story is over, and they have a very hard to defend market share. And their business model was based on overcharging people, and they can't do that anymore. So I think this company is. I don't think this is a value buy. I think there's a stock that it holds here, and then it slowly crumbles back under 28, and the next thing you know, it's $10. That's what I think about Whole Foods. I just think this company's in trouble. Delta Airlines. Like I said, this one has a bullish combination trade. They're selling the 30 puts, buying the 38 calls. I think this sector right now, I think things like this, these can bounce. I don't like buying, stuff at like multi-year lows, but nonetheless, these guys can easily bounce a few points. And then PBI, Pitney Bowes, is another one of these companies that's been kind of trying to change its business. Pitney Bowes makes those old postage meters, which is obviously something that is not doing particularly well for a long time, but it's holding these long-term lows. They've been trying to change their business as well. The 17 puts in July were sold right at the money. So they're looking more, if anything, for a rebound in the near term. It's kind of like buying, when you look at this, I mean, man, I think that's a really crazy idea, but they did sell these puts. So you're not getting a lot of premium, but it's going to have a positive delta. So I'll tell you, the thing I continue to watch is oil. I'm watching it on my other screen out of the corner of my eye, and I'm long energy, so I'm talking my book here. But, I do think right now, it's not working. I do think right now, though, you basically have a decent pullback in oil here. There's a trend line. Let's just start over here with this. Let me actually look at another month. Sorry about that. But I think CLU, there we go. So these are crude oil futures, and it looks to me like there's a trend line here. Now remember, we have API inventories tonight, but it seems like a lot of rough stuff is priced in terms of Brexit and everything else. So this is I still think this is pretty interesting here, and I just think we want to kind of remember that at this point in time, it's one of those things that you say, oh, I wish I could get energy, and then it pulls back to the 50-day, and it's like, is that the opportunity? I jumped in, and it might not be, but I want to just point out, we continue to see this, and the catalysts are tonight. So, I still think we might see kind of, upside in energy into the close, and that's what I'm kind of betting on myself, because we have those API inventories, and then tomorrow we're going to have the EIA inventories. This I thought was interesting as well. I noticed you essentially see a kind of an intraday cup and handle when it held this higher level here on USO. So I think that's also something that still argues the upside. And I'll tell you, if oil rallies, the S&P is going to follow, and bonds are going to follow in the opposite direction. All right, ABMD. By the way, folks, actually, before I do that one, my things, let me do this. Some kind of medical device. This looks extremely bullish. I mean, this thing didn't even blink when the market pulled back recently. This looks like it's getting ready to break out ABMD. Um, it's too small for the kind of company we usually cover on Research Lab, so I doubt we have the last earnings report. But there's a bullish ascending triangle right at an old resistance level. It looks to me like it's going to break out. The one question with companies like this is they often have kind of unpredictable events. I don't know if they might have an event coming up. Doesn't look like it. It looks to me like it's ready to break out and run higher. It looks like the earnings history has been positive, so I would tend to think the stock is bullish here, and I would tend to think that buying it around 104, 105, and with a stop under the recent lows around 98. I know it's a pretty wide sort of thing, but a stock like this, if you had a stop loss around like 97 and you pretty much bought it around here, I mean, it's a wide, risk parameter, but a stock like this, I mean, these are the kind of names that can be explosive. And, this looks to me like the kind of company that could break out and just run. So I like this one. What do I think about Pandora? I don't know. It's now just chopping at a point where it can go either way. It's completely neutral in my opinion. I think this one is best avoided. It's got some event risk as well. So I think this one's best avoided. T-Mobile US, yeah, I love this stock. I absolutely think it's a buy here. This I think is one of the best stocks you can own because Brexit or not, whatever happens. I mean, this company, I think these guys are just executing. This is an organic growth stock. Even if the U.S. goes into recession, this stock is golden. Everything. I think there's very few things that can derail this stock, and it's poised for a breakout. And I think that it's a buy. I love T-Mobile. It's been one of my favorites for many weeks now. I don't know about UGAZ. Don't know what it is. Natural gas is something I tend to avoid. Apple. I think we want to be bearish on Apple. I mean, I'm not a fan of it, but I think it's going to kind of drift its way back up toward 100. I think if you want to be short Apple here, I think you have better levels. I think you just got to realize is this stock doesn't move very fast. I think you got to let it go to you got to let it really get higher before you short it. And I think right now it's way oversold. I think this stock right now, could easily go back closer to 100 before we want to get short. Here's one thing I will point out. This is actually, see, the interesting thing about this is it made a lower high, and this is a sign of a potential acceleration to the downside, that this could actually be getting ready to really break lower. But at the same time, you have it making a higher low here. I don't like Apple, and I think you want to sell it if it gets higher. But I think right now the next $2 to $3 on Apple are going to be higher. I think if it goes up to like 95 or 97, what's this low from before? You often want to just look for things that go back to their recent lows, and then short them there. Right around 95, 94 and a half or so. See? 94.67. I'm going to set a price alert if Apple rallies up to 94 and a half, and we're going to get short. We want to, if anything, that'd be the place we want to consider getting short. 94 and a half on Apple. But overall, I don't know if I really want to be, saying that I'm really bearish on it. Mobileye had a downgrade and the stock is going higher, what do I think? MVLY. This had some bullish paper a while back. This looks pretty bullish to me. I think it's in good shape. It looks kind of like Micron that is having another good day. I don't know. Mobileye here, it could chop around. It might get down closer to 38. It's very neutral here. I can see how there is some good upside potential, but the 50-day is still under the 200-day, and I'm ambivalent about it. I think you could see it go down and test 38 on MBLY. what I would say is this a stock that what it can do is it could open at like 39 or 38 and then come right back. And there's, I think, a stock to buy with limit orders when you might be able to catch some chopping around. It's got a lot of short interest though. I know that's the one thing about it. Yep, Andrew left of Citron. Is he got Citron or is he at the other thing? But he's bearish about it. Here's a question. What do I think of FPRX? Well, I don't know it. You know, you guys are finding new stocks I've never heard of. There seems to be a support level here right in the high 30s if you look at this high from, late March. Right around 37.5, 38. The problem is a company like this very well might have some kind of big event coming up. Here's what I would say. I would say that it doesn't look like it does, because if it did, see that big volatility in July, sometimes when premiums are really high, it just shows July being high. What I would say is if this company does not have an event in the next 3 months, it's a buy. Because I think the market is going to bounce higher. I think biotech's going to bounce. This stock is at a good level, and it seems good based on that. But it's not a very, informed, it's a very conditional statement that I just made. I don't like messing with biotech risk. I prefer finding good names that are just trending higher, and this looks like one. Like we identified Exelixis a while back because it was a good name that was turning higher, and that one did very well. And Acadia is the one that we were also citing recently that I bought recently. It's like all the stuff is coming together the right way in Acadia, and I still like this name. So I mean, this is a name that is like a rock star name that and I think that your name there, this FPRX, might be a similar one. But I just don't know anything about it. So I would say that you really need to know what the timetable is, but I would absolutely say you do not want event risk. You want to buy this stuff without event risk. Say, for example, they have stage 3 trials in like December the data is due in like December, then it's a buy. If they have data due in a week, then it's not. Do you think LIT has growth potential with more electric cars? I'm just not a fan of new businesses. I don't like things that sound cool on television. I like stuff that's real businesses, and I think there's just too many unknowns in something like this. Usually things like this have multiples that are too high, and it's all geared to Elon Musk. And I gotta say, I don't know what this guy was. I beat up on him yesterday, but say like Elon Musk does. Say they decide they want to beat up on him for some reason, or say Citron comes out and says we're shorting Tesla because we think Elon Musk has a conflict of interest trying to buy Solar City, and this stock breaks 200. LIT is going to follow. I think it's a really messy thing. I don't think it's really worth your hassle. And if you want something involving energy, I would say buy ExxonMobil. I think it's a much simpler trade that is a much more established real business. So I'm just not a fan of these new things and the alternate energy things. And one of the reasons is, there's too much weirdness with look at like what solar energy has done. I just think there's too much weirdness in this area. And, they do strange things, and they don't move on the things you think they're going to move on. And it's all geared toward, sort of, hype. And I think that's something that's going to weigh on these names. What do I think about Ciena? CIEN. Wow. I mean, there's a nice pullback in Ciena. I think they had a good earnings report last time. I think that's what that gap was. See, on the 2nd of June. I think it's a buy here. I like Ciena here a lot, holding the 50-day. CIEN. All right, well, those are most of the questions we have. Let me see if I have anything else on my list I want to just mention. It is interesting today that this is really a NASDAQ and a small cap rally. And if you look here, you can see the NASDAQ has outperformed. It's interesting also because Credit Suisse said to buy small cap value. I don't know if that's a good idea or not. I just wanted to point out, whenever I see these strategy things, I like to say what other people are saying too, not just what I think. Also wanted to point out that, yesterday afternoon, S&P downgraded the United Kingdom. Um, very often the way these things work out, remember it's like back in 2008 when the company comes out, when the financial cuts its dividend, the stock rallies. The bad news comes and then you buy it. And I think right now, like I said, that might have marked the bottom of the Brexit freakout. Those are most of the things I wanted to mention. Well, that's really everything. I'm running out of time anyway. So remember, folks. All right, the other thing I want to mention is, like I said, I think a calendar is more of a bullish thing. And, very often we're going to see stocks will melt higher into a holiday. Well, we have the 4th of July weekend coming up. And I just want to point that out. So something just to think about. S&P at support at the 200-day moving average, 4th of July coming up. It can happen. And tonight we have Nike. We have close. I just want to make sure. Yeah, that's everything I wanted to cover. Do I see a recession coming? Do I know if Brexit can be rejected? I don't know anything about British politics, I'll be honest. So I just don't know the answer to that question. Based on what I've read, the answer is no. But I just don't know. I mean, I think this is a political issue right now. This is not an economic issue, and it's not even, from what I can tell, a financial issue. I think these people at downgrading the UK are, I don't know, it doesn't make any sense to me the way these guys at the credit rating agencies, but don't forget, they gave us a credit crisis last decade. They said if you put a bunch of garbage together, somehow it magically becomes high quality, and they basically erased about $1 trillion or $2 trillion of the world's wealth, and they still exist. I mean, these credit rating agencies are completely off the deep end, and I think it's a miracle that they didn't get shut down last decade. I don't have any respect for them, and it really upsets me to see them just doing stuff like this willy-nilly. And I also think, though, that if you look before this, I just think that this is something just anyway. Under Armour, again, I just don't know. I mean, this is a name that this will probably rally from here if I'm right about the market moving higher. It looks like it's holding 36 pretty well. I think it's probably, I thought it has downside risk to 32, but I'll tell you this. The fact that this thing did not break 32 with Brexit says a lot. So the one concern right now is that it has basically a little bit of a bearish descending triangle. If you look, well, I can't tell if it's descending or if it's just equilateral. See, it might be just squeezing in here. I think if this stock if it goes above this high, it's really in good shape. Like this high around, I think if it takes out 39, it's going to really take off. I think that's, that would be a level in Under Armour, UA. But also this company, like I said, it has a lot of event risk, and I don't really follow the, like basketball and golf, and I feel like there's sporting events that could also move the name. Do I think Bristol-Myers will go higher? Yes, I'm long Bristol-Myers. It's one of my favorites. I love it. And I think this is, this is still a buy in my book. I feel like I talk about Bristol-Myers every day sometimes. I'm long this name in stock in my IRA. Holding the old high, 50-day moving average, everything about it's been good. All right, do I see recession coming? I really don't know. I mean, the thing about a recession here is like I've said, in 2008, the United States economy was a giant oak tree that had rotted and it fell over. Well, now it fell over and it can't fall anymore. There's no excess. I mean, we have debt in the economy, but it's not the kind of thing that can become a systemic contagion. Household balance sheets are better. Jobless claims are low. I think that right now the U.S. economy is now a live oak tree lying on the ground, and you can kick it as much as you want. It's not going to go down anymore. I think right now we don't have any excess in the economy. And I think there's things slowing down, but the thing is that, you know, I don't think that means we're going to necessarily see any kind of significant recession. I know it's frustrating, but we basically have right now just an economy that's slowing for demographic reasons. But, you know, I don't know if it is going to just give us a clear recession. So, you know, and I think if energy continues higher, I think that the hidden thing that could happen is we could still see a weak dollar trade. If the euro comes back from this Brexit thing, we could see the yen get destroyed. We could see the dollar get sold. And if that happens, I mean, we're looking at not only a breakout in the S&P, but we're going to look at an accelerating economy because we're going to see oil move higher and it's going to lift the industrial sector. So I think right now, you know, I don't know if I see a recession coming yet. So anyway, folks, I keep kind of going over these. We're standing at a threshold, like a doorway. We can go in the doorway of recession or we can walk back away. That's where I feel we are right now. Anyway, folks, hope everyone has, and I think that the key litmus test is going to be the weak dollar. That will be the determining factor, I think. Hope everyone has a great and profitable end of the trading day. We'll be back tomorrow. Remember, if you want to be added to my morning distribution list for my strategy piece, you can email me at david@russell@optionmonster.com. And if you want to submit any questions for Market Action, you can go here to Premium Services, Market Action Pro, and type it in here. If you don't have access to this page, please email me, and we'll make sure you have it. Take care, folks. Talk tomorrow.